Hey, Aaron, I wanted to thank you for joining me again today. There's so much good stuff to talk about right now that's going on in lending. And today we're gonna talk about down payment assistance and zero down payment loans, which people are trying to hold on and conserve their cash. But I did want to ask you before we get started, what's the other guy look like? Is
Yeah,
he
really. I'm glad you said that because the other guy looks a lot worse. And no, my lip, we live in Florida, Lesley, so the sun is powerful down here. So I'm doing a little pre-cancer, nothing wrong, but the dermatologist said, hey, you need to treat this now or else it's going to get worse. And it's just kind of funny because I'm a sun lotion guy. I put it on, but I don't ever think about the bottom of my lip, which in reality, think about it, like it beams down to that all the time. So
Yeah,
I'm a
absolutely.
believer. I've got my what do I got here? My banana boat right here, 30 sunblock, so I'm ready to go. So
I love
anybody
it. That's
wanted
awesome.
to
I'm glad you're
anybody
getting
that
that taken.
wanted anybody that wanted to kiss me out there, you're just gonna have to wait another week until it heals. So we're good. But I'm excited to talk about this because Lesley, you know, down payment assistance sometimes has a negative connotation. It means, maybe it means I don't have very good credit. I need help. I don't have any money down, all of that stuff, which all can be true. And there's nothing wrong with that. And it serves a purpose for that. But I'm excited to talk about programs now, Lesley, that are coming out that people are just choosing to use these programs that have great credit, that have money in the bank. They just don't want to spend it on the house. I mean, Lesley, doesn't if you didn't have to drop 20 or 30 grand on a house and you could finance it, wouldn't you think most people would like to see that option?
Absolutely. What if you wanted to make improvements for the house? You needed to fence it. You want to update the kitchen. You've got a bath you want to do or flooring. I mean, nothing's cheap anymore. So if you can conserve that cash when you close because there's things you want to do that improve the value of your house. These are not negative things.
For sure, for
Take
sure.
advantage of
I'm
it.
really glad you brought that up because it's kind of like, we know when you buy a house, that's step one, because you're going to want to do things. There's things that break as part of being a homeowner, but it is absolutely rewarding. So instead of using and being dry at the end of closing with your down payment, your closing costs, why not have that money in the bank and use it for other stuff? So
Yeah,
I'm really
rather than
glad that you brought
yeah,
that.
even the move. I mean, you don't at some point in life you can no longer bribe your friends with pizza and beer to help you move.
Yeah,
Got to pay.
that's when they stop answering your calls. When I'm moving, like nobody's available. I'm sick. I'm in the hospital. But
Called my truck. I bought a two-seater. Yeah, I'm not helping you move again.
yeah, for sure. So let's start with the basics. So there really is still a lot of people that think number one that you have to have 20% down to buy a house. And what I mean is, if you're buying $100,000 house, you got to have $20,000. That is absolutely not true. That is not true. It hasn't been true for a long time, but you'd be amazed how many people still have that in their mind. So then you kind of get into, well, how much do I need down traditionally? Well, traditionally, anywhere from 3 to 5% down has been the traditional route that
Mhm.
you can get away with the minimal amount down. And that's traditionally what it is, and it's still available. And you still can put 20% down if you want. But, programs have gotten much better for no money down. So they're called down payment assistance programs, and generally they have a lot of restrictions on them. Okay, because they originally came out to help the lower income buyer. Um, that you couldn't make over a certain amount of money, that you had to be a first time home buyer. And that's defined what a first time home buyer means. It means you have not owned a home in the last 3 years, is what it means. So these programs have been around a while, but typically they're for that kind of person that's just starting out, that maybe lower income, doesn't have the means, whatever the case is, because we want to get them into homes. It's a super positive thing, which it's still there and it's super positive. But the down payment assistance programs that we have now, I don't even like to call them down payment assistance programs. They're just no money down. Like you're buying a house with no down payment. So that can be for the person that maybe on their second or third home, they don't need to be a first time home buyer anymore. You know what I mean? Throw that out the window. Income limits. Old age used to have income limits. Like you could, if you made more than this, you can't qualify for a no money down. That's out the window. You know, when you're buying a home, Lesley, as you know very well, you have two components. You have your down payment and then you have your closing costs. So
Mhm.
those are two components of money that you need to bring to closing. Do you think most people know about that, Lesley, when they're buying?
I think most people have an idea that they're there somewhere. They don't know. They have no idea how much they're going to be. They don't
Right.
really understand. Which by the way, is why you and I have jobs, right? Because
Sure.
like
Of course.
our job is to educate people, and you find people that bought their house 20 years ago, and we live in Florida. This is a destination. People want to come move down here.
Sure.
I'm seeing that people bought a house 20 or 30 years ago. When's the last time they bought a house?
Right, right,
They don't
right.
actually, and they've owned that home for forever. They've got all this equity. They don't want to use it all. But yeah, they don't actually know what new loan programs look like. It was very different back when they bought their house.
Yeah, for sure. And it has changed. And we went through the crash in 2008, 2009, and a lot of programs went away, but a lot of them are coming back now. And it's really exciting to see to give plenty of different options. So let's go back to that no money down option. So when you're buying a house, you have the down payment, which is the difference in the price and the loan. So if you're buying $100,000 home and you're putting 5% down, that's a $5,000 down payment you need to bring. Plus, you need to bring your closing costs. Could range just depending on the size of the home. But there are ways now to buy it with zero. I mean, zero. So let's talk about how you do that. First of all, we have these programs that provide down payments. So the way that it would work is that you would do a first loan, like you would do an FHA loan that lends up to 96.5% of the home. And then the no down payment option would come in. It would be a second mortgage that would be tacked on for that extra 3.5%. So that would be zero that you need to bring to closing. So second mortgage is just another lien on your property. Sometimes they're forgivable over a period of time, and sometimes they're not. What I mean is, forgivable means after 5 years, they just go away if you make your payments on time. Some of them have no payments. So
Mhm.
it's really a cool thing to do to get rid of that down payment. So we just talked about that. On FHA loans, the seller can pay up to 6% of the price towards the closing costs. So you are the expert, Lesley, on negotiating prices and closing costs, and we're in a market where sellers are probably a little bit more amenable to pay closing costs. Is that right, Lesley?
Absolutely. In fact, if you look at the Northeast Florida area by the numbers, like as I like to do, because
Yes, you're great at numbers. That's what I want to hear.
I'm a spreadsheet girl. I just actually did the math right before we talked. So we've got about 4.7 months worth of inventory right now.
Okay, is that normal? Is that
We're approaching a buyer's market. Some would argue we're in one. Where is that line right now? We're getting to where sellers are they're they're motivated to make a deal. Yeah, so this isn't 2020 where
yeah,
you're paying over the difference, and it doesn't matter if it appraises, you're bringing cash. Now the sellers are going, hey, can we help you buy my house? And
right.
that's
Yeah,
really
that's
what
a
that
great
is.
way to put
What
it.
can I
That's
do
a
to
great
help
way
you
to
buy
put it.
my house? Yeah.
Yes. And so going to that closing cost figure, generally when you're buying a home, you need the down payment and you need the closing costs, two separate buckets of money. But now that we're in a market where sellers are willing to kind of help you buy the house, they'll offer to pay closing costs for you.
Right.
So how great is this? Is that you can go to get the house, no down payment, with what we just talked about, and then the seller is turning around and crediting your closing costs. So literally, you can walk away with zero into the house. It is absolutely possible. It happens all the time. I like to correlate it with VA loans. So most people know that VA loans have been a no money down option for a long time for our veterans. They're awesome. They deserve it. But now it's becoming a little bit more mainstream where that no money down option is available for the rest of us. So I think that's pretty exciting.
Oh, absolutely. And again, we don't want to confuse this with you have no, this isn't the loans of 2006 and 2007 that are coming back to bite us. You still have to qualify for this loan. You have to have
Sure.
income to make that payment.
Yeah, for
You're not
sure.
getting a butterfly farmer and a waitress in $1 million house, like
Right.
on
Right.
stated it.
Right.
That is not what we're talking about. We're just talking about being able to conserve that cash for other things. And there's just and there's so many other things that go into when you buy a home that you're going to do that cash can be used for.
For sure. And you talked about, repairs, upgrades, things like that in the house, which is absolutely true. But sometimes you may need to pay off a debt or two to qualify, to get into the house where you're paying off that credit card or, some sort of installment loan that you have that you want to pay off. Um, and you may need to pay off to qualify. And you made a very good example of saying that you definitely have to qualify. The restrictions are less restrictive, but we're seeing a lot of people with great credit scores and very well qualified and have money in the bank using these programs because they just don't want to put the money into the house. Why not? Use it for other things.
Yeah.
Maybe it's a tax deductibility issue. Maybe that works for better for you over here. What is the total payment? Let's focus on that. If that's your comfort factor, it may be an option for you.
Well, and not for nothing, if you've got credit cards that are at 18% versus, or I was going to say car note, but that's probably not, those are ridiculously low. Like mine, I bought mine when I did. But if you've got those bills, it's probably a better idea. As much as people aren't thrilled about the interest rate that we have, it is still we're kind of at that historically average, like about where interest rates should be to buy
Yes.
a home.
Yes.
If we likely will not see 3% again in our lives, I can't imagine that we do.
Yeah.
I mean, who knows? I don't have that crystal ball, but if you're hoping for it, you're gonna be hoping for a long time, more than
Right.
likely.
Right.
So yeah,
The talking point is always too is like how much are you giving up in the appreciation of your house by waiting for that rate to go down?
right.
Nobody knows, but we do know that historically over time houses go up in value. And wouldn't you rather put it into the house versus putting it to rent where you don't get anything back? So,
Absolutely.
nobody can time the market. But again, going back to these programs, we're seeing just a completely new set of folks that are using these programs because they don't want to use up their cash. So if I can relay the point to all of the people looking at this video out there, it's like, man, the stereotype is not there. You don't need 20%. You don't need 5%. You may not even need anything to get into a house. I mean, it's really spectacular. So if you're on the fence because you just not sure, you don't want to part with your money, or you don't have much money to put down, there are options for you. And this is a perfect market to take advantage of it because the sellers are just waiting
They're
to
gonna look
help.
that off.
Like you said, they're waiting to help you get into the house. I love saying, and then you can use, and sometimes they're willing to buy down your rate. So you could get even a lower rate, and the seller is paying that for you because the seller wants you getting into the house. I think it's spectacular. You know?
Yeah. Right. I mean, God, and I don't want to say that this is entirely true. And again, I don't want to say, oh yeah, we're at a buyer's market. And I just read something or earlier this morning saying, Jacksonville was one of the cities that's in a buyer's market. And I would argue maybe not. Like
Yeah.
we're not. This is not a desperate market. I would say we're in more of an even market right now.
Right.
But
Right.
again, sellers are expecting their houses to sell in a weekend still. And I
Right.
know we
Right.
were doing
Right.
that 5 years ago, but that's
Right.
what they're expecting to see. So if their house is on the market for 30 or 45 days, they're starting to get pretty motivated and looking for creative ways to make this happen. And historically, that's not 45 days to sell your house, not a long time.
Not a long time. Not at
It
all. I'm
feels
glad you brought
really
that up.
long. Yeah, it just feels really, really long right now. And we're in such an immediate gratification mode, much more than we were 10 years ago. I'm
Yes.
telling you.
Sure.
So yeah,
Well,
like yeah, you get motivated sellers pretty darn quickly anymore. They're going to look at your offer for a little bit of creativity. And there's enough good agents out there that are able to communicate that to their sellers why they should be looking at that.
right, right. There's a lot of ways to make it work between, if there is a gap of what you're offering and what they're listing at, there's so many different ways to make it work. So both sides are happy. I mean,
Right.
it's not, that I think that's important. So, hitting the high points that I want to make sure people understand is that you do not need to be a first time home buyer to qualify for no money down programs. They're available for people that are just selling their house and they want to buy another one. It does not have to be. If you make over a certain amount of money, you don't qualify. These no money down programs are now available for you, whether you make $50,000 a year or $100,000 a year. That is not how it's always been. And it is not just for people that are maybe a little bit rough around the edges on their credit, even though those work for them, which is great. We're seeing them with people with spectacular credit, with money in the bank, and they're buying their second, their third home. They just don't want to put it into the house. And I can completely understand that. We talked about the reasons not to do it, maybe pay off some debt, those renovations, the furniture that you want to buy, the moving, none of that's cheap. So holding on to that money and getting that house for zero, I mean, what a great option to have, right, Lesley?
Oh, for sure. For sure. And like I said, you got there's all kinds of good agents out there. You've got seasoned professionals that can really help make those deals come together. They're a lot, people are so much more receptive to them today than they were 2 or 3 4 years ago, for sure.
Yeah, yeah, for sure. And even though maybe or maybe not we're in a buyer's market, it doesn't mean it isn't, that it's just absolutely slow. Like, I mean, people are making deals all the time. I mean, I talk to realtors all over the spectrum. Some are having great years. Some are a little bit slow, but I have seen, depending on the location and the condition, where those things go fast and then other ones sit. So it's just
Oh yeah.
about being creative with the amazing realtors that we work with, like you. And then also now the creative is starting to come back more and more in the mortgage business, which is nice.
Oh, absolutely. Yeah, and we are. I guess one of the points that I didn't quite make was we're still seeing multiple offers on certain homes as well.
Yeah,
Like
right.
it's yeah, we are not dead in the water.
No, no.
45 days on the market may feel dead in the water sometimes to some people, but it's really not. And there are people, especially here in Northeast Florida, there are people moving here every day.
Well, it's a great place. We're biased, obviously, we live here, but you just have a lot of options on price point, a lot of options on where you want to live for what you want. Do you want downtown? Do you want like a small feel, or do you want to be out at the beach, or do you want to be in brand new construction? There's so many options. I used to live in Washington, D.C., and there's really not a lot of options. I mean, it's just all expensive wherever you go.
Right.
So it's an exciting place to be. We have the options to get you in the house. I think it's an amazing time to consider buying and getting off that fence if you've been thinking about it.
Oh yeah. And there's inventory. You've got options.
Yeah,
You have to
that's the
just
point.
we are not in the please take my money and give me a house mode. I kind of joke about that, but I know people that's when they bought was, they're just like, I just need a place to live. We're not there. There are great options out there for pretty much any price point.
For sure, for sure. So let's get into that house for no money. We've got the options. Lesley will find you the house. I've got the money. Let's make
Yeah,
it.
I love it. Yes. Yeah. And so I am gonna put contact information up at the end of this and at the end of the shorts that I'll post on this so that people know how to get in touch with us and hopefully we can help some people find some homes.
Let's do it. I love it. That's what we do.
I love it. Thank you so much. This was awesome.
Yeah, love talking to you, Lesley. Thank you.
All right. I'll talk to you soon. Bye.